All right, folks, welcome back. This is episode 29. I'm going to be doing a brief review of what took place today. I obviously executed today. I wasn't planning on doing two videos, but obviously by the comments, some people are a little bit confused. So I kind of want to bring your attention back to that 12,553 and a quarter level, which is the relative equal highs here on NASDAQ. So that was kind of like the basis for why I went into the market today, Monday, the 16th of May, 2022, with a bullish bias. I was looking for this draw on liquidity still for NASDAQ. I originally went in looking for a trade in NASDAQ, but all right, and the S&P, much like the NASDAQ, had a daily swing low. And while we didn't have relative equal highs here for S&P, the bias was, in my opinion, warranted for at least the beginning of the week, looking for a continuation on the upside. Before I get into it, tomorrow, which is Tuesday, May 17, 2022, 8:30 in the morning New York local time, we have retail sales numbers, and then 2 o'clock in the afternoon New York local time, we have the Fed chairman speaking. So there's going to be all kinds of volatility at 2 o'clock tomorrow. That's the reason why the market was kind of like lethargic today. But I wanted to kind of like showcase something. So today I kind of like wanted to put a nail in the coffin finally about this whole business about rented MT4 servers. Okay, I'm never going to bring the conversation up again or the topic again. I think everyone knows now by seeing what I've done here, just in a short span of time. If I did this for another 5-6 weeks, you could clearly see that it's not impossible for the same things I was doing on Twitter years and years ago. Okay, with MT4, I'm not using MT4 here. I can't game the system. I'm using live data. You're watching me execute. It is what it is, folks. Okay. Now, it's paper trading. It's demo trading. But I do it just to prove that I can read this stuff. I'm not trying to beat my chest. I'm not trying to brag. But I just want to finally put this to bed because it's still, you see people talking about all the time. When they do that kind of talking, you take them back to these videos here. You link these videos to them and let them choke on it. All right, so we have the 1 minute chart. I went right into the 1 minute chart because we're starting with the bullish bias. And at 9:30, we see the market does, in fact, take out a short-term high. It declines. I'm not interested in going short. It does not give me a pattern anyway. Notice that there's no fair value gap revisited. The market creates this relative equal low, starts to rally, trades up into the afternoon in here. I want to see it create a buying opportunity. Now, the logic behind all this is we're in a day before Fed Chair speaks. So there's going to be very low volatility as a result of that. So it's going to be a small range day. Doesn't mean you can't trade it, obviously, but it takes a little bit more experience. Now, I'm not saying that you should trade ahead of Fed Chair Powell speaking or any future Fed chairman because it's going to be a very quiet day, usually like this. Okay, and it's important to know when the volatility is likely to occur and when also the volatility is likely to shrink up and get kind of like lethargic. If you look at the S&P at the top, you see the drop down, relative equal lows, and then we have the same similar pattern here, but look what NASDAQ was doing. See that? Lower low when S&P was saying, I don't want to go that low. So it was resisting going lower. Then we retraced higher, just like this NASDAQ did, but then NASDAQ made a lower low than that of 10 o'clock in the morning. While at the same time, the S&P said, no, once again, I'm not going lower than the low I made at 10 o'clock. So we had a divergence here and here. No indicators, folks. I'm using intermarket relationships, and this is what I dub SMT, Smart Money Technique or Smart Money Tool. Now, the importance of that is I already had a bias that's bullish. There was no short trades that were lined up with this model today. There was no interest in wanting to be short. I want to focus on being long. So we're in the 1 minute chart here, and I want you to take a look at what we have framework wise. Obviously, you probably already seen the short video compressed today, but looking at price action like this, yes, you can see there is a rally up. It breaks the short-term low, a fair value gap. It trades up into it and breaks down. Big deal. This doesn't fit the criteria because the displacement leg here would require us to see a fair value gap above 50% of the high and the low, the displacement leg, and we don't have that. So nothing here fits the model for a short. But watch what happens. The market creates a run on sell stops here, and then rallies. Retraces back down into a fair value gap. I've seen this happening, but I was trying to get the recording software that I use. And by the way, let me just throw this in here too, because I see people asking. My website address as a watermark, TradingView doesn't do that. Okay, I use my Camtasia recording software that helps me do these videos. It's just an application you can overlay like a text call out, they call it, and that's what it is. So it's really, when I'm doing the recording talking, there is nothing here. It's a blank chart. And then at the end of the recording, when I'm editing it, I'll just add in my website address. And so anyway, with that said, we've seen the market trade back down in, and I was trying to get the Camtasia Studio to open up, and sometimes it doesn't open up and give me what I need, so I have to close it down entirely and then restart it. And the whole time, this candle was doing its business, and I wanted to see it return into this fair value gap once more, and I got in on this candle here. And we'll look at the relationship between the NASDAQ, which was a little bit sloppier in here, versus the S&P, a little bit more structured here. So the fair value gap in here, this candle in here, it wicks down into it. And I want to get close to this fair value gap without it running too far away. So I kind of want to touch a little bit tonight with close proximity entries. That means you might not get so precise with your entries. You might fumble with your order entry, or something might happen like it happened with me. I wanted to record me entering, not just simply say, here's a trade I took. So I wanted to show, obviously, me getting in, putting a stop, managing the position, and adding the second position in here. What do you do in that situation if you miss the ideal entry? Well, as long as you're getting in there really close, or like I'm suggesting here, a close proximity entry, I don't think there's anything wrong with it. So if we are looking for entry patterns, the idea is we want to get into where our model is suggesting it. So we're seeing the market trade lower, lower, lower. It's failing to make a lower low like NASDAQ. And we have this low that's probably not going to be taken out because we're bullish. The market rallies up. We have a short-term shift in market structure. Then it trades back down into the fair value gap. Look how many opportunities it gave to go long. 1, 2, 3, 4, 5, 6, 7, 8. 8 candles. It gave an opportunity to get in this area here, either inside the fair value gap or in close proximity to it. Now, when the market starts to rally, I have one more indication that the market structure has shifted again, bullish, with these highs taken out here. And then we had a small little fair value gap there, and then you watch me add more. A limit order came in, filled it, only had 1.5, or no, I'm sorry, 1 3/4 handles, okay? 7 ticks, if you want to think of it like that. I had 7 ticks of heat against me on this little candle here before I started running in my favor. I took the full pull off here, and I did not get the highest high. I was a little disappointed in that regard. But the candle obviously hit it there, and we'll go over to TradingView and look at the business. All right, we're over here on TradingView. This is live. You can see time of this recording. This is where I'm sitting down at the computer. And the market trades lower, creates that short-term run here, rallies, breaking market structure to the upside, trades into the fair value gap, and the secondary fair value gap, and it runs up into the liquidity above here. Now, if I add the executions, I want you to see, look right in here, and right in here, and up here where you'll see the exits and entries. respectively. So you can see there's that candle, that entry, 3,994 and a half, 3,996 and a quarter, and it went down to 94. What's the low here? Yeah, 94 and a half. So it was only less than two handles heat against me before it started rallying there. This one, 39.9450, was right in here, and the low on this candle, 93 and a quarter. So 1 and a quarter. No, less than one. Yeah, less than one handle of heat entering on this candle here, and the next candle had a little bit of retracement. So very, very, very tight placement. And this was not entering in the fair value gap. It was in close proximity to it. So the underlying idea was it was going down in here to go higher, retrace into that to go higher, and you saw me map out all this stuff here and call it up, and whole business is done. But the exit up here, 4,022 and a half, and that's that. You can see there is no short positions in here, no short positions over here, none of that business. And on NASDAQ, we'll pull that up just for completeness sake too. Okay, and no executions here. See? So all the business was done in the S&P today. So my question to you is, when you see these videos, and I'm trying to illustrate, obviously, that I don't need to fraud anyone. The things I'm teaching you, I think that you're seeing evidence that it works. Hopefully, you guys have seen enough with this here. Do the math, folks, okay? In less than a week and a half, how much more would you see this compound if I did it for 6 more weeks or 5 weeks? Is it hard to imagine the things that I did on Twitter with MT4, not a rented MT4 server, literally pushing a button, putting the orders in, doing the whole business, okay? I know a lot of you have just discovered me, and you're seeing people post stuff about how other traders or other mentors or other teachers, they fake their positions. I'm open about paper trading because it's compliance. I'm not legally allowed to give you trade advice. So I'm protected by my discussion in paper trading because you cannot make money with paper trades and you can't lose money with paper trades. But I've always said this from the beginning. I've dubbed myself the demo baller. I champion that name because I want to make sure everyone knows that I'm not promising you profitability. I don't dangle a carrot in front of you and saying you're going to do what I'm doing here, because you're not going to be able to replicate this. You're not, okay? Don't be deceived by seeing me do this again for like the 5th time, running up an account like this with breakneck speed velocity. And this is just casually doing it in a tight range. When there's large ranges, I could have easily taken this over to $1 million already. But it doesn't prove anything except for the fact that I can read price action. That's all. That's all I'm showcasing. I'm not trying to say I'm the best. I'm not trying to say that you can't make money in other things. I'm just saying I know how to read these candlesticks. I know what they're likely to do most of the time before they do it. Not all the time. I take losing trades. But when it's really likely to work with the algorithm, I'll be dialed in. You can't fake what I'm doing. You can see me executing the trade. You can see me managing the trade. And you can see the orders entering and filling. They pop up. They verify the whole thing. No replay button up here. None of this stuff. Okay. See how that's blue now? Like you can't create that same scenario So I'm hopefully satisfying this discussion that people like to bring up all the time about rented MT4 servers, because like they couldn't wait to put that on me because they watched me do just like this, and I ran up to $5 million in a little less than 1.5 months. Okay, so I understand that doesn't seem possible. I understand that people that would be able to do what I'm doing could very easily go out there and defraud people. I'm telling you it's demo. I'm not saying that I did that with real money. I'm just saying that I can read price action. I can see these patterns forming. And even with these other folks out there with fake MT4 servers and MT4 screenshots of making money and all this other fake withdrawals, I made fun of all that stuff. I trolled those people on Twitter. Now I'm about to go back to Twitter. This time, I'm not going there with that intent. I'm ready should someone want to bring it, but I'm not there or going there for that reason. The reason why I'm going to Twitter is I miss being able to do my small little vignettes where I would do recordings of me either taking a trade or reading price action and having some short little clip, 40 seconds long or less, of music in the background. I miss doing that. Maybe it wasn't always your cup of tea for my music choice, but I have a very diverse palette for music. And it's just one of those things I enjoy doing. So it might not be worth it for you to follow me on Twitter. Or it might be. I don't know. But I kind of wanted to clear the air for the last time and show you all one more time where I don't need to do what frauds do. Like I can see this stuff before it happens. And you can learn how to do this too. You can read it before it happens. You can see it. You can have faith that the things that you're learning here are rooted on sound logic. It's not randomness. It's not retail logic. These are things that are algorithmic. And I think today was a testimony to that. So tomorrow's going to be very volatile. Be careful. Do not try to trade tomorrow. You'll probably hurt yourself if you do. Or don't listen to me and learn the lesson the hard way. Until I talk to you next time, be safe.